Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Parkamanik. How you doing, D?
Good morning, Will. How are you?
Great.
Yep. Before we get started, Will, you want to put on the disclaimer?
Jesus, I dropped the disclaimer. Sorry about that.
Yep. So while Will's bringing that up, everyone will get started. Keep in mind, Will and I, we are not a registered or Market Chameleon. We're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do or just sharing ideas. If you need advice, call your registered investment advisor or call your broker. That's what they're there for, to provide you with guidance, give you advice. There's the disclaimer.
Right.
And I'm going to share my screen. While I'm doing that, if anyone is joining us for the first time, Will and I would do these shows in the morning to help answer questions you may have about the Market Chameleon tools, the data, analytics. If you want to come on a show and ask your question directly, we do provide a link to Zoom. You could click on that. When it takes you over to Zoom. Once you're logged into Zoom, at the bottom of the screen, there's a button, raise your hand. Click on that. We'll let you in. You could ask your question directly. If you prefer to type your question, you can type that question into the live chat on YouTube. Will's watching it. He'll read it back to me. And while we're waiting for more people to join us and questions to come in, we're going to start out taking a look at the pre-market report, give a couple minutes for more people to join us, see if we could get some insights on what's going on in the pre-market hours, and then we'll go to the questions. Okay.
Perfect.
So pre-market report, these are stocks trading in the pre-market hours. I'm going to scroll down here, and we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. I'm coming down here and I see 93 stocks made our percentage gainers list. 46 are on our decliners list. So from this perspective, right now we look like we're setting up for a bullish bias at the open. Let's scroll up here and check this calendar view. And as you can see, this goes back in time if you wanted to look at the pre-market activity, but we're on August 17th right now. And from a high level, we have a summary. There are 535 stocks trading in a pre-market hours that are higher than the previous day's close, 212 stocks trading lower. If we look at the volume, there are 212.5 million shares trading on up volume versus 122 million on down volume. And if we convert those shares to dollar value, multiplied by the dollar price traded at, we see $3.1 billion worth of stock trading higher versus $733.9 million worth of stock trading lower. So far, all these are indicating that there is a bullish sentiment in the pre-market hours. Okay. One more thing. Let's scroll back down to this table. And if you look at the table, we do see that there are stocks in there. There are low cap stocks, ETFs, leverage products. And to make it on this list, if a stock is listed on a major US exchange, it's trading at pre-market hours and meets our thresholds of volume, price change, liquidity, then it could make this list. And to narrow it down, we could use the filters above. And if you do have a watch list you saved and you want to just look at the pre-market based on your watch list, just drop it down and select your watch list. But I'm going to use this one in ETF. And by dropping it down, we get a list of ETFs to choose from. The top one, SPY, that's the S&P 500 ETF. So when we select that, I'm going to do that now. The list below will get filtered by stocks that are holdings in the SPY ETF, and which are the S&P 500 constituents. And here we get a little bit of a mixed bag. 8 stocks made our percentage gainers list, 7 on our decliners. So slightly more bullish, but not a great amount of stocks are on this list. But I would say still right now we're looking at the trading in a pre-market hours, and mostly it's lining up as bullish sentiment. So I guess we give it a couple minutes. Will, if you have questions, I'll take them now.
No questions have popped up, but we have a new user who just took a trial, which is always nice when we get new users who come on. So,
oh, thank you. Well, then let's navigate to SPY. And a couple things, under the options chain over here. Bring up the options chain in SPY, and I've been trying to put out some videos in SPY, of the features on the options chain. And one of them was, I'm going to just navigate to a different expiration here. One of them was that the columns here on the left hand and right hand side. And if you drop them down, you can change these columns. For example, let's say market change. So what this market change does is it allows you to track the performance of the option from the previous day. And it's a way to kind of, see how the market dynamics work. Because when we look at an option, right, a particular option, let's say the 441 call, there are a couple different things that could make the value of this option change, right, from one day to the next. And one of them is time decay, right? So there's time premium in the option, and now it has, let's say, 2 business days to go from today. Well, the previous day it had 3, the 4. So if nothing happens and everything stays the same, then the option is expected to decay, right? If implied volatility doesn't change, the stock price doesn't change, nothing changes except the passage of time, then the option is expected to lose value because now it's getting closer to expiration. Then the value of the option could also change if the stock price changes. It has a delta, right? So if you start out, the previous day at like whatever was 432, 433, the stock moves down. Well, a call option has a delta, so a call option will decrease as the stock decreases. Call option delta will increase as the stock is increasing. So now you have 2 different dynamics that we just talked about impacting the option price. The other is the implied volatility, right? So if the implied volatility of the option is increasing, then the option premium will increase. If the implied volatility is decreasing, the option will decrease. So the implied volatility could off some of the decay, because if the option decays but the implied volatility goes up, the option didn't decay as much, right? Or if the implied volatility is lower, well, the option decayed, and on top of that, the implied volatility is lower, meaning that the option lost more value than its anticipated decay. So you got all these different factors now going into that option price impacting its value, right? And of course, you could break it down by each detail, but looking at the market price, you could just see the overall change in the price of this option, right? So from the previous day, we see the overall change, and sometimes that is helpful just to understand the dynamics of the options and so forth, because you could potentially see a stock go up, right? But the call price can still drop. And the explanation for that is that, yes, the call has a delta, but if the decay in the option and the implied volatility move in the option offsets any gain, the losses in that offsets any gains in the delta, you're going to get a net loser, right? So very important to understand option dynamics, and one way is to start tracking it and understanding it. So I wanted to kind of bring that column there for you, so you could start, if you needed to change it, and if you wanted to a quick reference, well, what happened to the, what happened to the put, what happened to the, so here's a couple, puts, the downside skew puts came in, right? So they actually did decay, and they did lose value yesterday, right? You can see here, because those downside puts, those tail risk puts decayed, the stock just didn't move enough, right? So those did decay. So you could see that the tail end came in yesterday, even though the stock was down, the downside tail risk still decayed and came in. Okay. So learning the dynamics and understanding the markets of how options operate, it's very important. And you have some of these tools in front of you to help you understand it, analyze it, research it, because that's one way you build up your skills, your experience, so you could start making, anticipations or projections of potential outcomes, okay, potential possibilities. So, yep.
We did get a couple questions pop in.
Yep.
Igor is asking, is it possible based on call and put options volatility trends to derive a top or bottom of the underlying equity?
So when we talk about, so if we use options, right, so yes, you could use options to see what the markets are implying the ranges of the stock, where the stock will trade and what range, okay, by expiration, right? So we could kind of use that. So let's just say here's the 440 strike. Okay, so that's where the stock closed at, almost 440. And August 18th, that's tomorrow. Let's look at August 17th. So this will be for today. Okay, so this is for today, right? This is where we closed at 150, 154. So I'm going to click on this, the 150 call, and I'm going to click on the I'm sorry, on the 440 call, $1.51, and on the 440 put, 154. And if we look at that straddle, right? If we look at that straddle, this is what it looks like, right? It's $3.05. So based on yesterday's close, the options price in a potential move in the morning, based on that, the straddle was implying a range of $3.05 in either direction, right? So that's the range, up or down, the straddle was implied, right? So if you bought the straddle and moved more than that, you'll be a winner, right? Because it moved enough to cover the cost of that entire straddle and then some. If it moves less than that, then you're a loser as a buyer, because if the stock only moves $1, those options will expire today. And if it's only $1 in the money in either direction, right? So either the call will be worth $1 where the put will be worth $1. The other option will expire. But if you paid 305, you're a loser. So what the market is implying is that a fair, range 305, because at 305, that's where the buyer and seller break even, right? So the buyer and seller of that straddle break even. So that's the market's fair value projection, the range, right, of the 305 to the downside, 305 to the upside. Okay, that's the range. If you're saying to the downside and upside, 305 to the downside, 305 to the upside, that in that range is where the market is anticipating. That's the market predicted forecast, right? That's the market predicted where it's fair value, right? You're looking at it. Well, is that a overestimate or underestimate? Because you're saying, how does that compare with my anticipated range, right? How does that compare with my unique outlook, with my, predictive analytics? How does that compare, right? Is the market getting in it too high or too low? That's where you start, right? Looking at your data and trying to anticipate, is it a little overpriced, underpriced, or where are we at? So here I'm going to the distribution, Theo, right? And I'm looking at a starting point. So what is my starting point? Well, if the market is saying this is where it thinks, we think it's going to move fair value, my starting point is, well, how does that compare to what the stock usually does in a 1-day period, right? This is my starting point, right? I want to see how does that compare to my baseline outlook. So if we look at SPY and then we get, the daily moves, percentage moves, right? So that's where it is here. If we get the daily percentage moves and then we convert that to a straddle, then using just, daily moves here, we see that the straddle would be on average, right, we're 286. So if we took the average daily moves, right, there's going to be down ones, up ones, down ones. If we took a long-term average, right, then we're looking at 286. So you could see here that it's slightly higher, right, than that. And it might be justified, right? We had some little bit of an uptick in volatility. It's really up to you to decide. But we have look at baseline where it seems like it's not too far away. I'm sure that, remember, this is an average, right? This is an average where these averages have standard deviations and so forth. But if we just looked at the, this, then the option prices were starting to get a little bit of a little bit above the average, right? If we looked at it though, what buying it at 305, right? If we just bought it at 305, how often did SPY in 1 day move by a big enough percentage in either direction, right? Up or down, to cover the cost of this current market straddle and be profitable, right? That's our next question. Okay, well, in our, we have 81 observations here, right, for call and put. So how often did it move by a big enough percentage to cover the cost of the current straddle, right? Because the current straddle is 305, convert that percentage moves. And here it says, because I lined it up, buy from both sides, straddle. Here it says that 43.2% of our historical observations, the stock moved by the end of the day by a big enough percentage that it would have covered the cost of yesterday's straddle. And when higher than that to make it profitable. Any profit, 306, 307, 308. So 43.2% of the time, this would have resulted in a profit from the long side. Okay.
Hey, D,
Yeah.
Rob is asking, does the straddle correlate to the standard deviation? And is the deviation of 3.05 the same?
Right. So that's what the straddle is, right? A standard deviation move up, a standard deviation move down. So that's what the market is implying. Exactly. That it's a standard deviation move around. Right. And if we wanted to go here, here's the activity. I'm going to go here. So under activity, we have a breakdown by each expiration, right? So here's August 17th. So this is today's. So yesterday we see, the midpoint of the straddle 303, which implies a move of 0.7%, right? So 0.7% up or down, that's where the buyer and seller break even, right? Both sides of the trade break even. So that's the implied move, right? So that would be the fair value move, let's say, fair value market, predicted move, 0.7%, 303. And then, our job is, as, data analyst, odds maker, whatever, is to look at the markets, right? And see how that compares with your unique assessment of where you think that straddle should be priced. All right. What are these? Is it priced well? Is it priced too high or priced too low? All right. That's what you're trying to determine from looking at the markets. Okay. So that's the hopefully I was trying to, and as far as the upper and lower range of the straddle, that's this 303. So you add the 303 to yesterday's price for the upper bound, 303 for the lower bound, right? So the upper and lower bound is based on where the buyer and seller would break even, right? That's where the upper lower bounds are. So standard deviation. So just to give you an idea of, I'm going to come here for the summary. So here, this is a chart. This is yesterday's chart. So we didn't open yet. We don't have today's chart yet. So look, we're looking at yesterday's close. So you see this green line. Do you see these two green lines? There's a green line down. There's a green line up. Okay. So what do these green lines represent? Right? There's the red line here in the middle. That's where SPY closed the previous day, right? So now here's the close. Now we have an upper bound and a lower bound, right? Well, what do those green lines mean? Well, those green lines, those are calculated, okay, one standard deviation move based on how the stock has been moving historically. So we're taking the last 20 days, right? And we're looking at how has the stock been moving, because the volatility could go up, it could go down. So if we took the last 20 days and said, where is the one standard deviation move to the upside or downside, right? As the first upper and lower bound range, right? The first upper and lower bound range is the one standard deviation, right? Because 67% of the time you're expecting to be within. So you could see here yesterday it sold off, and right there, right to the bottom, right to our lower bound, the initial lower bound, one standard deviation move. Okay, so this is how SPY traded yesterday, sold down right to that lower daily range. Okay, think of it as the lower daily range bound move. Right.
All right.
So, right.
So that helps, Igor.
Right. These green lines, these are not coming the option price is also, like I showed you, they would create it 305. These are generated one standard deviation move based on the stock's most recent 20-day volatility. Okay.
We did I mean, we're up against the opening bell, but a new trial user, Orange Bull, asks, hi, new user on trial here as well. I noticed that the Theo value is when you click open for a select option strike in the options chain to look at details is different. Orange Bull, as I read that now, I'm not exactly sure what exactly you're asking for about the Theo value. I'm assuming you're saying the Theo value is different from one page to the next. Maybe we're looking at it someplace else.
We'd have to see the two things you're comparing to answer, so I'm not sure. So sometimes you might be looking at stuff, analyzing stuff, looking at different parameters that you're setting, different, time periods. So we'd have to really see exactly like what the two things that you're comparing, because then I'll be able to really,
Yeah, and we have two new users on today. So tomorrow, Orange Bull, if you want to come on, we put a link at the beginning of every show at the top. If you see it, it's got a link to a Zoom. It's very user friendly. You just click on that link, you come over to the Zoom. You don't have to turn on your video, and you can just ask the question live. That way, we can kind of walk through the screen you're looking at, and it can be very helpful. So if you want to come on tomorrow and show us what you're looking at, he said on the scanner. Again, there are a ton of scanners.
Right. So the scanners, so the scanners are right. So if you're looking at the scanners up here, let's say the scanners here, Theo values, and then you go to the options chain, there are a couple of things that could be happening, right? The scanners are working in the background on a timer of, 15 minutes, trying to calculate the Theos based on, a one-time snapshot of here's the stock price, here are the markets, here are the analytics. So if you go to the options chain, lots of things could have changed, right? If even in a 5-minute period, if the stock price moved, if the option prices moved, if implied volatilities moved, right, you're recalculating it to the most current. So keep in mind, guys, that markets are dynamic and things are changing, right? And so will the Theos, so will the odds. It's like, when think of playing a poker game, every time you pull out a new card, odds are changing, right? New information is going. So the markets are dynamic. They're not going to always be exact. The other thing is that when you run a Theo from the options chain, right? So something that's in this, like say bull put spread, these are using preset parameters that you could change, right? The number of years in your Theo, they're different parameters that's set in here. So once you come over to the options chain, if you show me a snapshot of what you're looking at, I'll explain it better, because I'm trying to guess right now what you're looking at. But once you go over from here to the options chain, right, all of a sudden, the options chain is trying to fetch new data. It's using a different default parameter, could potentially. So if you show it to me, I'll explain it better, but it's important to understand why, right? Because the Theos, the market prices and stuff, they're not, it's not frozen in, forever. These are dynamic changes going on in the market, right? Because, we can't control the market, the market isn't like a single auction market where you get one price per day. Everything it's changing, right? Stock prices, implied volatilities, things are changing in there. So
he said, click open on first line Apple, this screen. I don't know, maybe the screener you're on he's talking about. Apple.
So
He
the
says this
230.
screen, click open on first line, Apple.
Yeah, this one. So I clicked on the open like this,
Yeah,
the analysis.
yeah,
I see 230 here, 230 like this.
yeah. I'm assuming that's
Yeah.
what you're saying, Orange Book.
Yeah,
Just so you know, new users, there's a delay between YouTube and what we're on Zoom. So sometimes we'll say something and yeah, the same now. It says 230. It's the same now. It says 230.
yeah.
So I guess there's a delay in the processing of all the information for sure.
Yeah, because it's too intense, right? You're not going to get. First of all, there's no way to do it real time because real time you're talking about millions of ticks per second. You can't force a recalculation like that.
Yeah, and there are whole videos that Dimitri's done about real-time data versus 15-minute delayed. And if you're doing your research on options, volatilities, the market, there's no way to interact in real time and have any advantage.
Right. But if you send me, if you could just send me a screenshot of what you're looking at, just send it to support@MarketChameleon.com. I'll take a look at, it. You usually seeing the same thing you're looking at, will make more sense.
He's saying it's exactly what you just showed. He's saying sometimes it's different between, I guess, Theo on the, and it's the processing of the data. That's why there's a difference. There's a delay. You explain that, right?
Yeah, right, because send me a snapshot next to you or send me a screenshot. I'll take a look. But what this will do when you open it up, it will be running in and out. Like right now, the markets are closed, so it's looking at the same thing. But if you have this open, if you have the credit put spread open like for a couple minutes and then you hit the analysis, I think that analysis is just fetching the most recent data. But send me a screenshot just so I know where you're looking, and I'll take a look at it. If you do see it's something unusual, just email it to me and I'll take a look at it.
Yeah, and that goes to anyone. Anyone has any questions or see anything that they don't understand on the website, take a screenshot, email support@MarketChameleon.com.
Yeah.
D always is going through and getting back to people. Awesome job, Dima. Thank you.
All right, everyone. Thanks for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Trade in peace, Chameleon. Let's have a great day, D. Bye.